This video is brought to you by the award-winning prop firm, Retest. Folks, welcome to part 2 of a 3-part series on support and resistance trading. Now, we've got Jamie Palmer in the house breaking it down for you today, and he's going to talk about identifying the correct levels of support and resistance and how to avoid the ones that don't work. Last week's episode was all about active versus static support and resistance. If you do want to get the full series, there'll be a link at the end of the video. And if you do want to learn more from Jamie, there's a link under the video. All right, folks, enough from me. Let's hear from my sponsor and get on with it. Retest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Retest apart is their no minimum trading days requirement on their challenge and verification stages. On top of that, traders who successfully pass the challenge and verification stages are eligible to receive a bonus payout of up to $30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more.
So on my charts in front of me, I have Euro USD on the 1 hour time frame on the left screen, and I have Euro USD on the daily time frame on the right. And what we're going to do is we're going to simulate and show you the difference between static and active support and resistance. Now, before we do this simulation, I want you to take note of a couple of things. Remember from my last video, if price is in an uptrend, it means that resistance is going to be broken and support is going to be held. So how do we identify an uptrend? By looking for this kind of pattern. Price making higher highs, higher lows, and resistance being broken, support being held. And the complete opposite if price is in a downtrend. Support will be broken and resistance will get held. So this is what we're looking for. Also, what we are also looking for is seeing where the institutions and retail will be buying and selling from. Now, institutions trade pretty similar to us, okay? We want to trade with the trend like them. We want to get the most amount of pips and we want to get the most amount of movement in our trades. So once institutions have identified where people are buying and selling from and which way the market is heading, they also want to jump into a trade. But where they enter is slightly different. I'm going to cover that in today's video. So as you can just give an example here, as price comes down like this here, okay, you would have a perfect break and retouch, yeah? Now, logically, everybody is going to sell here, or let's say the patient trader would sell here, because if price is in a downtrend, what you'll get is beginners selling here, right? They're impatient, they see it's a downtrend, they want to jump straight into it and sell the market. However, patient traders will wait for a pullback and they will sell at this resistance area here. That's fine. However, where would be a better opportunity to sell a downtrend? Would it be here or would it be here? Of course, it would be at the top, okay? The better you get in at a better price, the more money we make, okay? So if price is in a downtrend, it would make more sense to get in higher and then sell the market back down. These are where the institutions sell. Okay, and if you're really patient, you too can sell at this level. So what you'll normally get is price will trend down like this here. You will get a break and retouch, and 80% of the time it will drop like this here. However, banks don't want to sell here. They want to sell further up. So what you'll sometimes get is you'll get a break and retouch, price will come down, and then it will take out liquidity and then drop here. So there's 2 levels in a downtrend that we can sell from: the previous low and previous high. These are the levels that we buy and sell from. So to give an example here, price in uptrend, we would mark up the previous high and the previous low, and both these are awesome buying opportunities. Here, if you want to buy instantly, or we're a bit more patient and buy here. You can't necessarily always wait for this one to be respected, because, you know, most of the time the first one will be respected. But by marking up these levels, you're getting an indication on which way the market is heading. So let me give you an example now. Let's just look at the daily, and the first thing you want to do is mark up the previous high and low, static support and resistance, or supply and demand levels, is that what you want to call it. We'll mark up this level here and we'll mark up this level here. So for some unknown reason, Sellers came into play, drove price down. Buyers have come into play down here and driven price up. So basically, this is static. As you can see, it's just sitting there. It's not doing anything. And as the daily time frame comes up to this level now, we all know, everybody else knows, then we're probably looking for sells at this levels. Okay. Now, as price comes up to this level, let me see the next candlestick. Yes. I wonder if the next okay, no. So as price has now started to reject from this level, this doesn't necessarily mean sell, okay? Once we've got a confirmation, a reason for us to be looking for a trade now, we're at a resistance area, supply and demand zone. We want to then go down to the lower time frames and look for active support and resistance. So if we just go now to the 1 hour, and what I want to do is start to mark up the previous highs and lows in the market. Why do I want to mark that? Because that's telling me which way the market is heading, okay? So as you can see here, price in uptrend. So what's happening? Resistance is being broken, support's being held. Break and retouch, okay? Resistance is being broken, support's being held. So quite obviously we're in an uptrend. There's another one just here, pull back. So what we want to do, okay, I'm just going to try and do it on the 1 hour, see if I can capture this perfectly, is at this point here, right, we know at this point here that we have a big institutional level here. We have a big static resistance area here. However, we want to mark up as well the active support and resistance. So we want to mark up the previous high and the previous low. Okay, so previous high, previous low. So the one before that one, just to show you, would be this one here. Trend up, pull back, trend up, pull back, trend up. So at the minute we are still in an uptrend, okay? There's no confirmation to tell us anything otherwise. So if price is going into a downtrend, what would we be looking for? Exactly, we would want to see the previous support lines being broken, resistance being held, okay? So I'm just going to mark up the previous support line just here, and what I want to do is I want to watch it to see what happens, okay? Because at the minute price is still in an uptrend. You see here we've come down to this support line, so we could actually still be in an uptrend. We still could be buying from this level, okay? Let's see what happens. Okay, price comes down now, so we now have a confirmation that we are going into a downtrend. So we've got a lower low, there's a previous low, so that support line has now been broken. However, this is the important part, we could still come all the way up. We have to do this kind of pattern. We have to confirm a lower low and lower high, okay? So what I want to see next is a pullback happening in the market, okay? So I'm going to mark up the previous area of structure, okay? So that's the previous high, and the previous low is going to be somewhere around, well, obviously here, because I've already marked it up, okay? So I'm looking for a pullback in the market, okay? There is perhaps my pullback. Let's see what happens. Yes. Are we going to create a further lower low? Are we going to create a further lower low? Yes, just here. So now at this point, you see here, right here is the perfect opportunity to sell the market. The perfect opportunity. Because what you've got now is a lower low. There's the previous low. This is the new low. And we have a lower high. There's the new lower high. There's the previous lower high. Okay, it's confirmed to us it is a downtrend. So see how we have a break and retouch? This is the perfect opportunity. The reason why we wait for this is because you can't have a conflict of interest, and this is sometimes where manipulation happens. If price is in an uptrend, okay, you can't have this move here. Because what is this? You can't have a lower low and you can't have a higher high at the same time. Because what is it? It can't be in an uptrend because it's created a lower low, and it can't be a downtrend because it's created a higher high. So what have you got? Conflict of interest. What you'll find is people will try and sell here and get stopped out. People will buy there and get stopped out. So being patient, waiting for the perfect signs, and they are literally as simple as that. Lower lows, lower highs, support and resistance. Price will literally drop from this level. Okay, there you go there. Now what we want to do as price comes down now is we want to start to mark up again the previous highs and pullbacks in the market. Okay, so again I'm going to mark up to here. So again we've got the previous low and high, because again, we've got a trend down, a pullback and trend down. Everybody's going to be selling here, yeah? Everybody's going to be selling there. However, the banks would want to sell here because why? It's a better price. It makes sense. So there's two levels you can sell from, here, or you can just sell here, put your stop loss above here. It doesn't really matter, okay? We will cover that in the next video. What happens? Okay, this one gets respected, okay? So as you can see here, 9 times out of 10 or 8 times out of 10, the first level gets respected. You would have made a nice few amount of pips. Now it looks like we're drawing in liquidity. So you see how we start to draw in liquidity here, right? Because the banks, this is an interesting part, because the banks have now confirmed that this is a downtrend and they too want to get in. And notice how I've marked up the previous low and high. This is exactly where the banks want to sell. They want to sell at the previous high, not the low. And does price drop? Yes, price drops now. And same again, we mark up the previous highs and lows, and vice versa. We just carry on and carry on again. Now what we'll do in the next video is we'll start to put it together now with a strategy. I'll show you a strategy with support and resistance, and in the next video we will get some high win ratios, high risk reward trades. So I hope you like that quick introduction to support and resistance. See you in the next video.
Alright folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade 1 lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So folks, to find out more, click the link in the description below or the card above.
Right folks, there you have it. Jamie Palmer breaking it down for you. Now the next video is epic. It's a full strategy. You're going to have to watch it. Now we'll put a link up here somewhere for you to click to get the full series, all 3 parts. And if you do want to learn from Jamie, there's a link under the video. All right, we'll see you in the next one. Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.